Hey, it's Sammy with Trading Transformations. Today is July 28th. Overnight, we had the agreement for tariffs between the European Union and the United States lock in at 15%, so the market gapped up wildly. We took about 7 trades today for 178 points. Let's take a look and see how everything played out. All right, so the market came all the way back down to Friday's close. As you can see, we had a little bit of short time frame data, a little bit of conflict. We were trying to run up through Friday's high where I have this little marker here for a long break. And we have the trade protected. It's risk-free. We're going to take a break even on this first trade. You can look up and see we spent a lot of time failing at Friday's high. Now we're breaking sentiment where bears are taking control. So we're going to go short here through yesterday's closing price or Friday's closing price. So not only did the market gap up, but now we are shorting from Friday's closing price. So as we hit the overnight low, we hit the value area low, we're going to trail, and our trailing stop's going to lock in 32 points. We're not quite yet done with this short. The open is coming, so we're going to take one more short, try and work our way down to that pink line to pivot. Let's see how this trade plays out. Now it's safe that the trade's going to start running. We'll go ahead and move that stop loss down to a break even. So the trade is going to be risk-free from here forward. As we punch through the overnight low, as we break the value area low, we're going to go ahead and trail with a plus 30 stop loss. So when that hits, we're going to lock in and enjoy plus 30 points. All right, for all you orb traders, open range breakout, you can see we've got the long break up top, we got the short break on the bottom. The purple bars to the left are open bars. So we opened long just to stop hunt everybody out. That was correct. And now our data held. So we're going to go ahead and short right through the break and go down through pivot and the 61. We're going to trail aggressively and lock in plus 31 on our trailing stop. You can see we bounced off of pivot now. This is actually a pullback on a 15-minute chart. We're able to exploit that because look at all that data. We've got momentum, we've got sentiment, we've got volatility breaks. We're going to try and crush through this and work our way down to that next Fibonacci and Gann level. Now you're going to notice I put a checkpoint here. That is 1 hour support. We're going to go ahead and manually lock 37 point. All right, so now we are reversing off of that 50 Fibonacci level. All of our data is starting to flip. We actually have an awesome 1 minute soda getting ready to play out here. That's our signature reversal trade. We're going to make sure we protect this trade because reversals are a little bit higher risk. They require advanced data reading. We're reading decay of high time frame data and we're reading growth of short time frame data. That's how we know how to take reversals. Jamming right up to that open price, we're going to lock in 29 points. Look at all that high time frame data decayed. We've got powerful data on our short time frames. We're jumping back in this trade, working our way up to VPOC. Now there is a long break right there. That's that orb again. Let's see how we handle that. Now, as we start testing that, we're going to go ahead and just smash out and lock in 25 points and be done for the day. If you don't have confirmation with your strategy, that is more than likely why you're struggling. What we do is we know why a trade should work from a fundamental analysis. We know where a trade should work and where we should lock profits using technical tools. The main difference in our probability is it's super high because we're using the powerful confluence of momentum, sentiment, and volatility. You're at a massive disadvantage if you're not using these types of data-driven tools. Just click that button below. Let's have a quick call and we'll get you started right away.